What's up, YouTube? Silver Dragons here, and thank you so much for watching this one. Today I'll be joined with Dan Wilton, the CEO of First Mining Gold. We'll be talking about gold and also looking at their company as well. So, Dan, how's it going?
It's going well. Thanks very much for having me on the podcast.
Yeah, absolutely. So first thing, I definitely want to talk about First Mining Gold for sure, and we can dive into that. But I really want to get your take on everything gold's been doing. So far this year, we've seen a dramatic increase in spot price, 1,500 all the way up to over 2,000, new all-time highs.
Mm-hmm.
So it has been flat, though, over the last month. Where do you think it's going short term, maybe throughout the end of the year? And do you think the election will have any impact on price?
Well, the short answer is yes, the election's absolutely going to have an impact on price. I don't exactly know what the impact's going to be. Depends a little bit on the outcome. Listen, I think in the near term, there is very little that you can see on the horizon that would give people or should give people confidence in the economy going forward, or confidence in the equity market going forward, for that matter. We're still in a period where central banks and governments are shoveling money into the economy, either through quantitative easing or through, actual direct expenditure and fiscal stimulus. So with all of that, I think in the near term, and near term, I'd say, out a couple of years, the Fed's come out and said we're kind of giving up on an inflation target until we see, real inflation coming back. What that means is we're going to allow inflation to happen until we're comfortable that we have this debt under control, which is, potentially going to be never. So with all that, I think, we're in a bit of a period of consolidation of the gold price here after a really quick move up. But I think longer term, you're headed for significantly higher prices than this. And one of the analogies that I often use, I've been in this business long enough to have seen a couple of cycles, and I've been asking people recently if they remember 2006 and the gold price in 2006. And no one ever really does, because it was, gold was on the way of moving from in 0203 gold at $260 an ounce, and it was on its way to 1,800. But in '06, it was testing like $650 to $700, which, other than a couple of days of trading, was kind of the previous long-term high that we had seen in the gold price. Right. And that's kind of what it feels like right now. It was, we were testing 600, 650. It was double that sort of long-term average price people had gotten used to at 300. And everyone was saying, oh, you know what? The gold price feels really toppy here. It's double from that 300 level. How can it go much higher? Well, lo and behold, you have a financial crisis, which, by the way, our financial crisis right now makes '08 look like a very small speed bump in terms of the actual stimulus and monetary stimulus that's going into the economy. And that prompted gold up to levels, in the 1,800, 1,900 zone. And we promptly, have moved through that over the course of the last few weeks here. So I think we could look at $2,000 gold as the $600 gold was in 2006, or 650. Yeah, it kind of feels toppy because it's double off, the recent lows, but it could easily go up 3 times from here. Just like it went up 3 times from here from '06 to 2011. So I think long-term trend, I'm a believer in ultimately, the supply side of the business and marginal cost of supply ultimately helping set some floors on gold price. But no, I think, we're in a new world where I don't think we're ever going to see $1,300 gold again. I don't think we're going to see $1,500 gold again. So, cost inflation is going to come in, and that's going to ratchet up that sort of base level that everyone had in their mind. But no, I think near term, we get through the election. My biggest concern about the election, and I can be a little bit removed from it as I'm a Canadian and
Sure.
don't actually have a say in it. We get to watch as spectators here north of the border, but I think the biggest outcome of this election is going to be uncertainty, and uncertainty is going to feed the gold price. So that's where I think I'd have a really strong positive near-term bias on gold.
Right. And then, so yeah, you mentioned it seems like we're sort of consolidating now, building a floor at around 2000 and possibly going to spring off that. So some people have predicted really a 5 to 10 year bull run moving forward. How long do you think this is going to go? And you mentioned possibly up to $6,000 gold. How long do you think it could take to get there?
I think we've seen the pace with which it can move in the last few months to kind of hit some new highs. It's tough to say, if you look historically at the cycles that have tended to be, in that 5 to 10 year range, I think we're, a year or two into something like that. But I think you could have years for this thing to run yet. We're not waiting for the crisis to happen, but the gold price peaked 3 years after, well, two and a half, 3 years after the financial crisis in '08 to get to, April of 2011. So I think something similar to that, at least, because the reality is we haven't started having the grown-up discussions about how we're going to pay for all this stimulus, right? We haven't had real grown-up discussions about how we deal with a deficit in the United States that's going to be well in excess of $1 trillion a year, with no foreseeable way to reduce that. So anyway, I think all that does is put a real positive bias toward gold.
Yeah, I would definitely agree. And while I got you on, what do you think about silver? Silver is sort of the tag along Timmy, right? I mean, but really silver has done well, this year, and it's definitely caught up to gold as far as, with the ratio now at about 70, I think, 170 to 1 or something like that. So do you think we'll see new highs for silver as well?
Yeah, I think so. Silver usually, it's a bit more of a coiled spring than gold. It can stay lower for longer. And I've, rightly or wrongly been around this business for 27 years now. And I've always been a believer in the gold silver ratio and long-term averages, right? And I think, the long-term average is in around 60 gives me an indication of when I would think silver versus gold. And so I think there was a really positive bias to silver earlier in the year. We happen to have been fortunate in some of our timing of our spring pole project and exposure to silver, because we did a silver streaming transaction with First Majestic, and Keith Newmar, our chair, is the CEO of First Majestic. So it's always kind of been a very close relationship between the companies, but we ended up, as part of the silver stream, taking some First Majestic shares as consideration for kind of a long-term funding for one of our projects. And we took those shares, just before the silver price started running. So I generally don't watch the silver price that closely because, we have a bunch of gold projects, but I've been watching it more closely now. And I think no, there's definitely still a very positive bias. Silver will continue to close the gap and probably overshoot, because it usually does. So, it's kind of had a quick catch up here. But what a lot of people haven't seen, and it's interesting, you've seen the gold equities largely outpace the gold price performance. The silver price performance has been a lot more recent and a lot quicker, but you haven't seen the silver equities catch up yet. And that's one of the things that we keep watching, particularly with First Majestic, is, we're coming into a quarter where they've gone from selling silver at $15 to selling silver at $27, right? That is
Sure.
Almost all marginal profitability. And so you look at what the kind of percentage change in cash flow is going to be, in free cash flow. It's going to be extraordinary. So I think there's lots of bright days, particularly for silver producers ahead here.
Yeah, lots of potential for sure. So if we can steer over to First Mining Gold, I know you mentioned spring pole, but really the company's done some amazing things over the last year or so. Gold Lund, Pickle Crow. Can you talk about these a little bit?
Yeah, absolutely. We just for a bit of background, we have a portfolio of gold projects which was really put together in the downturn in 2015, 2016, and kind of put into one vehicle with the original goal of being a mineral bank. But as we and the previous management of the company had seen, the quality of the projects that Keith and the team put into this company, just it's extraordinary. And so we always knew that the biggest lever that we had to surface value in this portfolio was Springpole, because it's a 5 million ounce gold project in a great jurisdiction, really robust economic profile, and has a perception issue around permitting. But I think we've got a great plan moving forward to be able to demonstrate that we believe we can build and operate this mine in an environmentally sustainable fashion without any long-term negative impacts. So that said, at the beginning of the year, it's amazing how things change in a few months, but we're kind of looking at how are we going to get the capital to move these projects forward. We had some great drill results at Goldland last year, but they weren't really being recognized at all by the market. I think people more thought that Goldland was a liability than an asset for us, just because we had to spend money on it. So we were coming to the conclusion that the only thing we were getting credit for was Springpole. So we need to do something to actually surface the value, demonstrate the value of these other projects. And so we started on a process of finding some partners for them. And the first one was Pickle Crow, where we did an option deal with an Australian group that had a really, really strong technical team that had just been very, very successful in finding high-grade gold in an old past-producing gold camp in Western Australia. And so they were looking around the world kind of for the next gold camp that had been overlooked. And they ended up in the Pickle Lake camp in northwestern Ontario, and the project that they wanted to get into was our Pickle Crow project. So, we had it a bit down the priority list in terms of our own focus and expenditure, because we've got, a world-class 5 million ounce gold project that we're taking through pre-feasibility and permitting. So we decided to option the project off to these guys, and they had to spend $10 million over 5 years to earn an 80% and give us some cash and share payments to earn an 80% interest in the project. Well, lo and behold, they have gone from a million-ish market cap value when they announced the deal to as high as in excess of a 300 million market cap in the last 6 months after they've closed the deal and financed it. And they've raised $37 million to execute on their $10 million spend. They've got a huge drill program going there now. But this project, which was kind of down our priority list, the beginning of the year, we'd have had a market cap of, call it 100 million US, maybe 120, 130 million Canadian. This project today, with the project interest based on their market cap, plus the shares and the cash we're going to get from the earn-in value, it's somewhere between 70 and 80 million dollars right now for us, right? And this was sort of one of those assets that was well hidden in this portfolio. So that gave us a real sense that, we needed to be doing more to unlock the value of these assets in the portfolio. And Goldland really was the next logical one, because just to the south of us, a company called Treasury Metals had the Goliath project, which is, a million ounce development project, has its federal environmental approvals to build a mine mill and a tailings dam. 25 kilometers, the plant would be 25 kilometers away from the main zone at Goldland. And you could just put together something that we thought would be a really, really robust development project with 2 mines feeding 1 mill. Why would we want to go and spend $200 million building another mill when there's going to be one 25 kilometers away that you could just build a little bit bigger? So, and there have been discussions between the companies for years and years before I arrived. And the reality is the mining industry is a lot like every other industry in the world, where, when you have your competitors that are sort of next door, Most people spend a lot of their time standing, looking over the fence at their neighbor's yard and saying that their grass isn't quite as green as the grass that we have on ours. But it does take a little bit of foresight and creativity, and in some cases a bit of humility to put a couple of projects forward to really, make the best company that we can. And so for us, for Goldlund, which was going to need more money to advance, the time frames, we'd have to redo a bunch of work that they've already done at Goliath in terms of the time frames of permitting a mill. So it just made so much sense. So we sold Goldlund to Treasury Metals in exchange for shares and warrants and a royalty and some deferred consideration payments. And all told, that whole package, at the time that we announced it, I think that package looked like $35 or $40 million. Well, today that package looks like it's worth $80 or $90 million. Again, put that in the context of our market cap at the beginning of the year, which was 100. So I think we've been able to say a couple of these portfolio assets, not even our main project, just 2 of our 5 other portfolio assets, we've been able to demonstrate today, probably 150 to $200 million of value. So,
Oh, that's great.
What are the rest of the assets worth, right? Like they're not worth zero. I think we've showed we're in an environment in $2,000 gold and going north where these projects, established projects, have real value. And so that just goes to Springpole. And the value proposition that we have at Springpole, this is one of the largest undeveloped open pit projects in Canada. One of very few projects in the world that could produce 400,000 ounces a year. It's located in a great jurisdiction, really supportive permitting environment in Ontario. They permitted 4 big open pit mines over the last 4 years. So, this is a project at $1,500 gold price, our economic assessment that we did late last year, which we're updating now with far more detail in a pre-feasibility study, which will come out at the end of this year. But our PEA last year at $1,500 gold would show this project having an NPV of 1.2 billion US, 1.6 billion Canadian at a $1,500 gold price. You're basically getting that for free inside First Mining right now.
Yeah, and also, with gold obviously surpassing that, we're up 2,000 and there's much more potential for gold, obviously much more potential down the road.
Yeah, I mean, one of the important things I think you should look for in investments in projects, particularly, gold companies is one thing, but you get a lot more leverage to the gold price usually through a development project. So first you gotta try and find value, and value is hard to find in producers these days. I mean, if you believe the gold price is going higher, they'll be great. They'll have expansions, they're generating great cash flow, great free cash flow. That's going to continue increasing on the way up. But, today you're paying 1.5 to 2 times the net present value of the company as it sits, right now in order to buy that. So whereas for us, you're buying this at less than 0.1 times the net present value of the project. So again, if you believe you can get it permitted, development projects like this in the last cycle would typically trade in the market at kind of 0.5 to 0.7 times their net present value when they get permitted. And then historically you'd have strategic partners or strategic acquirers come and buy these projects for 1 times the net asset value because, they're trading, the buyers are trading at 2 times the net asset value. And we haven't been in a market to be able to see that M&A market really starting to come to the fore. And it's been slowed down by COVID. And that's one of my big takeaways of the past week, having attended the Beaver Creek Precious Metals Summit. I think there's lots of bigger companies starting to look at projects, but no one's really been able to travel. And the bigger the company, kind of the less they seem to be able to travel. So typically a mining project, you need to go put your boots on the ground before you're going to be willing to, spend hundreds of millions of dollars to buy a project. So there's going to be this kind of pent up demand in the M&A cycle, and companies are starting to get rewarded for growth. That's going to be an important component going forward. But I think, our whole goal at First Mining here is advancing Springpole to the point of taking the most risk out of it that we can, getting our permits, having really robust feasibility study done on it, working with our local communities and securing our social license to make sure that, we're able to move this project forward. And then at the time when you receive your environmental assessment approvals and your permits, that's really the time that you can assess how you move forward from here.
Yeah, sure. And, you mentioned Keith Newmeyer. I know he's the founder of First Mining Gold. One of the things that stood out to me when I talked to him was he said, when you're looking at investing in a mining company, one of the things you should really look at is management teams. And I thought that was really wise. So I wanted to ask you, how does he add value for your shareholders?
Yes, and Keith's our chair. He's a very active non-executive chair, and anyone who knows Keith know that he's a bit of a force of nature. But he's been a great partner and a very supportive chair in helping us really think through a bunch of the strategic moves that we've made. Keith brings to our company a really unbelievable track record and background and kind of investor group that has followed him and made money with him in First Majestic and his other endeavors. Keith adds an enormous amount of value to us, and we're very lucky to have him as our chair.
Well, that's great. Well, Dan, thank you so much. To wrap up here, is there anything else you want to talk about in regard to First Mining Gold? And also, where can people find the company's presentation?
Yes, you can find the presentation on our website, which is www.firstmininggold.com. Or if you need to reach out to us, it's info@firstmininggold.com. That's a good place to start. Listen, I think certainly appreciate you taking the time to chat today and hear a little bit about our plans going forward. Lots of catalysts in the next 3 to 6 months, including completing our pre-feasibility study. We've got some great work going on at Goldland and Goliath for an economic study being done there. Lots of drilling happening at Pickle Crow and at Goldland, and we're starting to look at exploration plans for some of the other projects in our portfolio. So lots to keep people up to date on. So keep checking in or join our mail list. We're happy to keep people updated.
Awesome. Well, thank you so much. That was Dan Wilton, everyone, and I'll put the link down below in the description if you want to check out the website. And lastly, thanks again, Dan, for coming on, and we look forward to having you on in the future and talk about your projects and how they're all going.
Thanks very much, and appreciate the opportunity to chat today.